points right now from where we closed on Friday. Bouncing off of some support here, trying to make a nice little run higher. Looking at the economic calendar for this week, it's going to be an interesting week because we also, again, this week have some top tier data, but crunched in with this top tier data that we have this week, we are going to have a wild card, and that's with the release of these Fed minutes right here. We're going to start today with Empire Manufacturing. Big down, down 14.9 today. Marco was expecting this to be at a reading of 5, or the 3.9 last month. I have not seen yet the details behind this reading. This being said, this is certainly one of the big reasons that we are seeing the mortgage bond market improving today. We'll also get National Association of Home Builders HMI, the Housing Market Index, later today. Tomorrow's going to bring us housing starts, building permits. We're going to get CPI on Wednesday. Now, CPI is Consumer Price Index, consumer-based inflation, extremely important to what happens with the Fed. And then the wild card here, these Fed minutes. We're going to get the release of the minutes from the last Fed meeting, which will give us a much deeper look inside that Fed meeting, what the Fed was thinking, that sort of thing. But I have to remind you, the markets a lot of times get a big knee-jerk reaction to these minutes when they do happen, and we can see things get bad really quickly, only to recover slowly over the course of a day or 2 days or 3 days sometimes. But this time it's going to be interesting once again because we've gotten so much has happened in the last few weeks, not only as far as economic news, but the way the situation in China is unfolding, with China devaluing their currency last month, some of these types of things. There are some new things the Fed will now be dealing with that when this meeting was held, they weren't dealing with the same set of circumstances that they are today if they were to hold another meeting, and certainly the same set of circumstances that they will be dealing with when they have this next meeting in September, with all this talk about will they begin to tighten or won't they. So Fed minutes, I think, going to be very interesting and potentially create some volatility as we get into Wednesday afternoon. Thursday, as always, brings us initial jobless claims. We'll get some more housing data with existing home sales. We'll get Philly Fed, which is another important look at what's happening manufacturing-wise, because it's a Philadelphia Fed district, which is so heavy in manufacturing. We'll see how that maybe goes with what we've got here, if we're seeing any kind of a slowdown in the Philly Fed district, and then leading indicators to wrap up the week as well. So a lot going on. Smack that in there with the middle of the week with the Fed minutes, and we have a recipe for another potentially volatile up and down week of mortgage bond prices, not unlike what we saw last week. It's interesting when you look at the candlestick chart from last week, because you see red. However, you also see mortgage bond prices improving throughout the week, although we have red candlesticks. So what this means is, even though we traded at higher ranges, the market still finished down on the day, each day it traded last week, and obviously we're not going to continue to see that happening. We got a nice start today, up being 20 basis points on this morning. So this is where we are heading into the week. Of course, I'll be back with you each day with more updates. If I can help you at all, please don't hesitate to contact me, as all my information will be here at the end of the video. Thanks and have a great day.